Hey everybody, it's Chuck Barone. It is Wednesday. Holy crap, I got December here. January the 3rd, 2024. Getting used to this whole New Year thing, man. You know, it takes me a few minutes. Like, you notice you're writing the date, you still want to put 23 there. Want to put December instead of January. Wow, it's all been a blur. But anyway, it's good to be back here. And before I get rolling on the show today, let me take a half a second. Welcome everybody to the show. And as always, thank you guys for your support. It was nice to be in the comments talking with you guys yesterday. I intend to do that a lot more this year. Not every day. I'm going to try. And it's just a fun thing for me to interact with you guys in the comments there. It's fun. Anyway, let's talk about markets today. So, we remember yesterday, not a great day. I think what's happened now is markets kind of understanding that they may not get as many rate cuts as they were hoping for, and they also may not get them as quickly as they were hoping. We got some debt issues, so all of this weighing on markets, and you're seeing the market's quick turnaround, right? So the stock market today, not a great day for the market. Stocks falling across the board. You got the Dow down 284 points today, 37,430. The NASDAQ down 173 points, 14,592. The S&P down 38 points, 4704. I think, what I was reading today, the consensus seems to be a lot of this is profit taking. Stocks had a massive run up at the end of the year. The Santa Claus rally was real, guys. And I think a lot of this is traders, and I'm talking the professionals, not the, mom and pop investors, but traders taking profits off the table, especially with now a little less certainty about what's going to happen with rates. Although Fed minutes getting released today kind of confirms the bias toward moving toward rate cuts. We'll talk about that a little bit later. Bond market today rallies a little bit, not in any super big way. The 10-year falls 3 basis points, now sitting at 3.91%. While the 2-year up 1 basis point, 4.33%. So the inversion is still there. It's been there for quite a while now with no recession. Usually that's the big indicator, right? Bond market, I think these rates where they are seems to kind of really be a little bit more of a reasonable reflection of where things are heading in the bond market. When we were seeing these big moves every day, 20, 30 basis point moves, even a 10 basis point moves a lot in the bond market. The bond market was whipsawing all over the place. Now it seems to be a little more certain that cuts are coming, the only uncertainty being when, and the bond market kind of settling down a little bit. Now we'll see how long that can hold, because you got the usual litany of Fed yo-yos out there talking. You had one today saying, well, we still might have to raise rates again. I'm sure everybody kind of rolled. There was a big collective eye roll when they heard that, right? So the bond market kind of settling down. The dollar, though, rallying up again today, now at 102, almost a half, 102.47. So the dollar strengthening, mixed signals, right? Stronger dollar usually means hikes coming, not cuts. Maybe they overcorrected, bringing the dollar all the way down to almost 100 on the index. Now it's just a natural bounce back up to where it's supposed to be, kind of. So we're going to keep an eye on the dollar and watch that. Not everybody really gives a crap about what happens with the dollar, but I do. I would like to see a strong dollar. And I think, I'm not worried about inflating my way out of debt like the government and the corporations and the states are. So a strong dollar is good for me. I want my dollar to hold purchasing power. With the stronger dollar, precious metals suffering, though. So you have gold down again today, down $18. Now sitting at $2,040.40. Silver falling 70 cents today, now at $22.95 an ounce. Not a big surprise to see metals, gold and silver prices coming down as the dollar gets stronger. That's certainly not a surprise to anybody who's been listening to the show. I think that metals, gold and silver, are kind of fairly priced here. I think I would like to see silver a little bit higher, truthfully. I think silver $25 is more a fair value for silver. But gold at $20.40 seems to be, for right now, a fair value. Oil today rallies up a little bit, up $2.61 a barrel, now sitting $72.99 for a barrel of West Texas Intermediate. Right in the trough we expect it to be in. Until it moves above 75 or below 70, we're just going to kind of give you the numbers, but it's right. Oil, one of the ones we've really been nailing over and over here, right where we expect it to be. Bitcoin falling today, down $2,086, now sitting at $42,791. I think this is kind of, how it works in Wall Street, right? The old Wall Street saying, buy the rumor, sell the news. I think that Bitcoin run up with the rumors of the ETFs, we'll talk about that in a little bit, or the ETFs, we'll talk about that in a little bit. It looks like these ETFs are going to become a reality. The question is who's going to be who's running it and how many of them will there be? I think this is nothing more than profit taking. Bitcoin's had a pretty massive run up from around 16,000 to almost 45,000. I'd still say, I'm telling you guys, when these ETFs become reality and everybody can get into Bitcoin without actually having to buy it, it's going to be hot. I'm telling you, it's going to sizzle. Anyway, so let's talk a little bit about this Bitcoin ETFs. We've had the rumor of that. We know BlackRock's the big one trying to get it going. So it looks like now this is going to become a little bit of a reality. Now you've got mainstream companies, Goldman Sachs, in talks with BlackRock. They want to be a part of this new ETF on Bitcoin. When you have mainstream companies, and big ones, especially companies that's well connected, as Goldman, now getting on board, that tells us that this is probably going to be a thing. It's going to happen, right? And it's interesting. Look, I was looking at this ETF, so check this out. You may not know this, but right now, there are 14 different asset managers who've applied and are trying to get approval for a Bitcoin ETF. Of course, we've heard of Grace, something or other, and BlackRock's. The SEC has been pretty reluctant to okay these ETFs because they worry about Bitcoin being as unregulated as it is. They worry about market manipulation, and they worry about investor protections because once mom and pop get involved, market moves affect the people who now affect the SEC and their bosses. So, they're worried about, those are the big holdups. But it looks like it's going to happen. The SEC is expected to announce its decision on this on January the 10th. So coming up quick, about a week from today. So we'll get that news, and that'll be market moving one way or the other for Bitcoin. I believe that Bitcoin's going to go up, but the sell the news thing might be a reality here. I think that we had a pretty big run up. I think when the news actually comes out, some of the bigger players will want to take profits out. We're going to watch it and we'll report on it. But interesting stuff. I didn't know there were 14 possible Bitcoin ETFs pending. That's interesting. Okay, so let's talk, moving on. U.S. national debt. I was reading an article about this today. Horrifying news, man. This is so bad. So the U.S. national debt now just hit $34 trillion. It took a whole 3 whole months, to go from 33 to 34 trillion. $1 trillion in debt in 3 months. Now, I tell you guys, get set for a lot more. This is not a phenomenon that's, oh my God, a one-time thing and we're not going to see it again. This is going to be more and more. Congress has until January the 19th of this year to fund 4 of the big federal agencies, with the rest of the government funding for that government set to expire on February the 2nd. Okay, so they got a little under a month to put all of this together. It's an election year. They're talking about impeaching the president, which will only increase the partisanship and the divide between the two. The last guy who worked together with the other side to try to get this budgeting, debt limit, that kind of stuff, well, guess what? He got kicked out of office. So what do you think? How do you think this is going to go down, man? You think this is just they're going to just put the blinders on and vote to extend it? You think there's going to be some big fights? There's going to be some big demands? Well, if we're going to do this, we want this. It's just going to be a big clash to watch. But I'm telling you, once they finally settle it, expect that new budget number to be way higher than it is now, and debt to get even bigger than it is now. More debt, faster. The government rules, man, they may, it would be nice to live in their world for a while where nothing you do has any real repercussions to you personally, only everybody else. And people used to actually care about everybody else, but not so much anymore. So that's reflected by our government. $1 trillion in 3 months. Can you imagine? It took us 200 years, more than 200 years in this country to accumulate the first $1 trillion in debt. Right? Now, 3 months? Not great news, guys. This was interesting today. Top U.S. corporations loading up on debt. Yesterday, in the bond market, over $29 billion in corporate debt issued yesterday alone to just 16 companies. Companies like Toyota, Ford, UBS, BNP Paribas, Lloyd's, a whole bunch of companies, 16 companies in there borrowing hey man, if you're going to borrow money, might as well get it when the rates are lower. They're actually one of the reasons rates spiked up a little bit yesterday was because of this massive supply they had to unload. That's going to be a thing you're going to hear more and more of, where the Fed is going to lose control over, they control the overnight rate. They set that one, but that's it. And they're going to lose control over these rates because of the supply of bonds coming online. Not just the supply the U.S. government is issuing. Then you got the states, municipalities, businesses, and on it goes. They're saturating the bond market is all that's happening. And there's going to come a time when there's not going to be enough money for all these bonds. And that will be when you see the real big spikes, and there'll be a calamity. It's coming. It's coming. And finally, Fed releases its minutes from their meeting. A whole bunch of nothing and blah, blah, blah. Bottom line is they talking about rate cuts. Rate cuts certainly coming. The only question is when and how many. How deep does the Fed really intend to cut? I got a feeling that's going to depend on some economic factors and economic data we're going to get this year, which makes what we talked about yesterday even more important. This data, as it trickles in, we talk about it on the show. It's all weighing in to down the road factors as far as how this economy is going to work, how real estate's going to work, companies that are, debt sensitive, and businesses and industries that are debt sensitive, obviously looking for rate cuts, needing rate cuts, and all of these little bits and pieces are like the little pieces of the 1,000-piece puzzle that we put together to get an idea of where this economy is and where it's going. Anyway, guys, that's it for the day. As always, we appreciate your support. If you could, please hit the like button. It changes the algorithms around, gets our video out in front of more people. We need to get more views up on this. I will be in the comments section today, so if you've got anything funny, you got a good joke, you just want to say hello, or a legit question, hit me up. I'll be on there with you guys. We will be back tomorrow to bring you guys up to date. Tomorrow we'll get jobless. and some other important data. We'll see how markets move then. Until tomorrow, guys, take care. Thanks.